What if I told you that starting in 2026, millions of Americans on Social Security are going to open their bank account and see a number they did not expect? Some of you, and I mean this, are going to see $56 more deposited every single month. That's over $670 extra dollars a year. Money that could cover groceries, prescriptions, utility bills. But here's the other side of that coin. And this is the part nobody is talking about on the mainstream news. Some of you are going to see your check shrink by as much as $202 a month. That's over $2,400 less per year. Gone. Without warning. Without a letter that clearly explains why. Let that sink in for a second. $202 less. Every single month. Now, I've read the official SSA documents, the Congressional Budget Office projections, the Medicare trustees' reports, so you don't have to. And what I found buried inside those hundreds of pages of government language is something every retiree, every SSDI recipient, every SSI beneficiary in this country needs to hear right now. This is happening sooner than you think. And if you are not prepared, you could be caught completely off guard. Stay with me through this entire video because by the end, I'm going to give you a step-by-step action plan. 6 specific things you need to do this week to make sure you are on the right side of these changes. Welcome back, everyone. If you are new here, welcome to the channel. My name is Ashmil, and this is the place where we cut through the government jargon, the political spin, and the fine print to bring you the real truth about your benefits. Every single week, we break down Social Security, SSI, SSDI, Medicare, SNAP, and federal stimulus updates in plain English, because you deserve to understand the system that you paid into. This channel exists for one reason: to make sure you never miss a dollar that belongs to you. Before we go any further, I want to ask you to do something for me right now. Drop a comment below and tell me your city and state. Just your city and state. I read every single comment, and it helps me understand exactly where our community is located, so I can highlight the state-specific impacts that matter most to you. Whether you're in Los Angeles, California, or Houston, Texas, or Miami, Florida, or a small town in rural Ohio, your situation matters, and I want to speak directly to it. Also, if this channel has ever helped you, if this information has ever saved you money or stress, please hit that like button right now and make sure you are subscribed with the bell notification turned on. We post multiple times a week, and you do not want to miss what's coming next. All right, let's get into the truth about 2026. Here's what you need to understand first. Every year, Social Security payments are adjusted through what's called the COLA, the Cost of Living Adjustment. This is the mechanism the Social Security Administration uses to make sure your benefits keep up with inflation. At least that's the theory. For 2026, the Social Security Administration has officially announced a COLA of approximately 2.5%. Now, on paper, that sounds like good news. And for many people, it is at first glance. Here's the math. The average Social Security retirement benefit in 2025 is approximately $1,976 per month. A 2.5% increase on that amount equals roughly $49 to $56 more per month, depending on your specific benefit level. So yes, if you are receiving close to the average benefit, you will see a modest increase. But, and this is a massive but, that increase does not exist in a vacuum. Because at the same time that COLA is going up, Medicare Part B premiums are also increasing. And for the majority of Social Security recipients, Medicare Part B premiums are deducted directly from your Social Security check before it even hits your bank account. Here's what the Medicare trustees have projected for 2026. Part B premiums are expected to rise by anywhere from $10 to as much as $30 or more per month, depending on final CMS rulings expected later this year. So, let's do the real math. If your COLA increase is $56 and your Medicare premium goes up $25, your actual take-home increase is only $31. That's not $56 more. That's $31 more. Now here's where it gets worse for a specific group of people. If you are in a higher income bracket, meaning your individual income is above $106,000 or your household income as a couple exceeds $212,000, you are subject to what's called IRMAA, the Income-Related Monthly Adjustment Amount. This is a Medicare surcharge, and in 2026, those surcharge tiers are being adjusted. Some individuals who were just below the threshold in 2024, based on income reported on their 2024 tax return, which is what SSA uses to calculate 2026 premiums, could find themselves pushed into a surcharge bracket for the very first time. And IRMAA surcharges can add $70, $100, even $200 or more on top of your base Part B premium. That is how you get to $202 less per month. Not because your Social Security went down, but because your Medicare costs went up, and nobody sent you a clear, plain English letter explaining it. This is happening in every state. But the impacts are sharpest in states with higher costs of living, California, New York, New Jersey, Washington, where retirees on fixed incomes are already stretched thin. Now let's talk about who this affects, because not everyone is in the same boat, and I want to be very specific here. Group 1, Social Security Retirement Beneficiaries. If you are receiving standard Social Security retirement benefits, you will receive the 2.5% COLA increase. Whether you actually feel that increase depends entirely on what happens to your Medicare Part B premium. Most retirees will see a small net gain, but it will likely be less than $56 in real take-home money. Group 2 SSDI recipients, Social Security Disability Insurance. If you receive SSDI, the same COLA rules apply to you. Your benefit will go up. However, SSDI recipients who are also enrolled in Medicare, which applies to most people who have been on SSDI for 24 months or longer, will face the same Part B premium increase. The net effect is the same, smaller real gains than the headline number suggests. Group 3, SSI recipients, Supplemental Security Income. Here's a critical distinction. SSI recipients also receive a COLA adjustment. But SSI is funded differently, and the maximum federal SSI payment for 2026 is expected to rise to approximately $967 per month for an individual and $1,450 for a couple. SSI recipients do not automatically have Medicare Part B deducted from their payments the same way, so some SSI recipients may actually see a cleaner, fuller increase. However, SSI recipients enrolled in both SSI and Medicare need to verify their deduction situation individually. Group 4, Veterans receiving VA benefits alongside Social Security. Veterans who receive both VA compensation and Social Security need to be aware that VA benefits are also COLA adjusted separately under a different timeline and rate. The dual benefit picture for 2026 is actually more favorable for veterans, but you need to verify both payments independently. Group 5, Low-Income Seniors on Medicare Savings Programs. If you qualify for a Medicare Savings Program, QMB, SLMB, or QI, your state may be covering some or all of your Part B premium already. The 2026 income thresholds for these programs are also being updated, and some people who didn't qualify in 2025 may now qualify in 2026. This is important. Do not assume you're ineligible just because you were told no before. Now, I know a lot of you are wondering, why is this happening? Why does the government give with one hand and take with the other? And that's a fair question. Let me explain it without getting into partisan politics, because this affects people across the entire political spectrum. The Medicare premium increases are driven by rising healthcare costs, hospital costs, drug pricing, outpatient services. The Medicare trustees are required by law to keep the Part B trust fund solvent, and that means adjusting premiums when healthcare spending goes up. The IRMAA surcharges, the income-based ones, are driven by bracket creep. Social Security and investment income that was once below the threshold may now push people over the line, particularly if they took required minimum distributions from retirement accounts in 2024. And the COLA itself, 2.5%, is actually lower than the 3.2% COLA recipients received in 2025. Why? Because the CPI-W, the Consumer Price Index for urban wage earners and clerical workers, which is the formula used to calculate COLA, showed slower inflation growth over the measurement period. Critics argue this index doesn't accurately reflect the spending patterns of seniors, particularly on housing and healthcare. That debate is ongoing in Congress, but for 2026, 2.5% is the number. The bottom line, this is not a conspiracy, but it is a system that is incredibly complex, and that complexity costs you money if you don't understand it. Okay, here's what you need to do, right now, this week, 6 steps. Step 1. Log into your My Social Security portal. Go to ssa.gov and log into your personal My Social Security account. If you don't have one, create one today. It takes about 10 minutes. Inside, you will find your 2026 benefit verification letter, your current Medicare deduction amount, and your payment history. Write down your current net monthly amount so you have a baseline for comparison. Step 2. Check your 2026 Medicare Part B premium notice. The Social Security Administration sends out COLA and Medicare adjustment notices every November and December. If you received one, dig it out. If you didn't receive one, check your My Social Security portal under Messages. Your 2026 Medicare Part B premium is stated explicitly in that notice. Compare it to what you paid in 2025. Step 3. Pull your 2024 tax return and check your MAG, IRMAA. Surcharges for 2026 are based on your modified adjusted gross income from your 2024 federal tax return. Pull that return right now. Look at line 11 of your Form 1040, that is your AGI. If it is close to or above $106,000 as an individual, you may be subject to IRMAA. If you believe your income has gone down significantly since 2024 due to retirement, loss of a spouse, or a major life change, you can appeal your IRMAA determination using SSA Form SSA 44. This is critical and many people don't know they can do this. Step 4. Apply or reapply for a Medicare Savings Program. Contact your state Medicaid office, not SSA, but your state, and ask about Medicare Savings Programs. The 2026 income thresholds have been updated. In many states, a single person earning under $1,660 per month may qualify to have their Part B premium paid entirely by the state. In some states, the threshold is even higher. This one step alone could put $185 or more back in your pocket every single month. Step 5. Update your direct deposit and contact information with SSA, if SSA cannot reach you. If your address is wrong, your phone number is outdated, your bank account information has changed, you are at risk of missing critical notices or even having your payment delayed. Log into your portal and verify everything is current. This takes 5 minutes and it could prevent a serious problem. Step 6. Talk to a benefits counselor for free. Every state has a State Health Insurance Assistance Program, SHIP. These are free, unbiased counselors who can review your specific Medicare and Social Security situation and tell you exactly what you qualify for in 2026. You can find your local SHIP counselor at shiphelp.org. This is a free government resource. Use it. Before I wrap up, I want to take a moment and speak directly to some of you. I know that for a lot of people watching this video, every dollar matters. I know that some of you are choosing between prescriptions and groceries. I know that some of you are watching your savings disappear while the cost of everything around you keeps going up. And I know that getting a letter from Social Security or Medicare that you don't fully understand can feel absolutely terrifying. You are not alone in that. There are 70 million Americans receiving Social Security benefits right now. Millions more are on SSI and SSDI. And every single one of them is navigating a system that was designed by bureaucrats, not by the people it's supposed to serve. That's why this channel exists. That's why you are here. And that's why I will keep showing up every single week to make sure you have the information you need to protect your income, your health coverage, and your future. You paid into this system. You earned these benefits. And you deserve to receive every single dollar that belongs to you. All right, let's bring it home. Here is the bottom line for 2026. The COLA increase is 2.5%. That could mean roughly $49 to $56 more per month for the average Social Security recipient. But Medicare Part B premium increases and potential IRMAA surcharges could wipe out most or all of that increase. And for some higher income beneficiaries, the net result could be up to $202 less per month. The people who win in 2026 are the ones who are informed and prepared. The people who lose are the ones who didn't know to check their portal, didn't know about IRMAA appeals, and didn't know about the Medicare savings programs that could have covered their premiums entirely. You now know, so act on it. Here's what I need you to do right now. Smash that like button. It tells YouTube this information is valuable and helps us reach more people who need it. Subscribe to this channel and hit the bell so you get notified every time we post. Because we have major updates coming on the Social Security Fairness Act implementation, SNAP 2026 changes, and a new stimulus proposal that is moving through Congress right now. Drop your city and state in the comments. I want to know where you're watching from, and I want to make sure I address your specific state's benefit rules in upcoming videos. Share this video with someone you love, a parent, a neighbor, a friend on fixed income. This information could make a real difference in their life. And in our next video, we are breaking down the Social Security Fairness Act. Specifically, what it means for teachers, firefighters, police officers, and government workers who were previously denied full benefits. If you or someone you love worked in public service, that video is going to change everything for you. You don't want to miss it. Until then, stay informed, stay protected, and remember, your benefits are your right. I'll see you in the next one.